when you found the currencies in the WebAuth wallet sitting down there at the bottom of the.
Bro, that blew my mind. There's so much change happening inside the WebAuth wallet right underneath everyone's nose. And you have to like use the wallet, I feel like, every single day to catch this stuff. Otherwise, you're not going to catch it, you know?
Well, yeah, bro, because Metallicus is like that organization that just does stuff, and they're not like every other crypto native organization that needs to make it all like emphatic and, oh my gosh, we're doing this. Hey, over here, we're doing it. Nah, they just do it. And then if you pay attention, you pay attention. And if not, oh well. They're not here. They're not here to like, they're not here for retail right now. I mean, they are in a sense a loan protocol and whatnot, but what they're doing behind the scenes under the hood, all institutions.
Facts.
So,
yeah.
But yeah, it was cool to see you have an aha moment, because when you have an aha moment, we all have an aha moment. Then I was like, damn. Because the crazy part is none of those have been announced yet, bro.
None of them. We got, and that's why I really want to go over that clip of John Ungerland, because he says we're gonna go parabolic with announcements. So it's like everything that he had said in that little pitch that he said, and then we got 14 or what? Because there's 16 trust lines, so we got 15 other trust lines that we haven't had any announcements on just yet. And these trust lines, for sure, 100% look like stable coins that belong to credit unions that are participating in the banking innovation program.
Yeah, I mean, you literally called out the Sand Cloud announcement before Metallicus even announced it, and you got that information off of looking at the trust lines. And there are freaking 16 other trust lines sitting there. Might as well share your screen, bro, and play that clip, unless you have the timestamp for it. I have the video log pulled up, but you know,
I have the timestamp. Go to it's you're talking about John Ungerland when he's talking about the Parabolic news.
Yeah.
It's from 1630 to 1830, literally 2 minutes. And bro, it's the best 2 minutes ever.
All right, hold on. Let me play that real quick, because it's almost like it's inevitable as these stable coins are sitting there with trust lines open. They've already announced the St. Cloud,
Facts, bro. Facts.
All right, what time? When was the time stamp that you said?
1630.
All right, 1630. This will be our intro, and then we'll jump into today's freaking breakdown, because this one's going to be nuts.
Yeah, 1630 to 1830.
Here it goes.
Not getting, Metallicus. That's a real key.
Awesome. And then here's a question for both of you. How would you describe the current state of adoption of stablecoins and just even tokenized deposits or other on-chain financial instruments across global payments? I mean, what are some misconceptions, and maybe what's something you wish just more people in the industry would know?
John, I'll let you take it first, and I'll comment.
Well, we're laughing because there's a couple of very significant data points that we get asked this question a lot.
Yeah.
So for the credit union leaders out there, and those institutions are particularly significant to us here at our business. I run into too many executives who believe that these are niche, new, unproven technologies, and I like to point out statistics like the market cap of the Bitcoin network alone, that one token, that one global network, the market cap value of that is larger than the entire U.S. credit union industry.
Yeah.
When measured in market cap, it's about 8x or close to 10x the liquidity of the credit union industry. So I think that another misconception is that consumers are afraid of this stuff because it's only used by underbelly types. The numbers around payment channel growths just don't support that. Year over year, we're seeing that digital asset payments is the largest, if not the only, growing bucket of electronic payments. And we're about to go parabolic on that with announcements recent and coming from folks like Square, PayPal, possibly Google, Amazon, Apple weighing in here in third and fourth quarter of 2025. So
y'all better put your But if your seatbelt ain't on, put it on right now.
Man, I swear, bro, that right there, like more just like super alpha, super sure that these guys are winning the race. And bro, that confidence and name dropping those names, I don't know, like I don't feel like this guy is like capping on any level, bro.
Yeah, you can't just say those names and be like, oh yeah, there's gonna be some. He didn't like. He wasn't just like, yeah, there's gonna be some upcoming announcements. No, parabolic announcements.
Parabolic announcements, bro. Yeah,
yeah, bro. I really like. We're gonna bounce back to what he says, but it's kind of late at the end of the podcast. It was in the last questions that he was asked, but he pretty much says that, look, anybody thinking that this is 5 to 10 years away is sadly mistaken. You know, if you think that this is all still 5 to 10 years away, you're gonna get left behind badly.
And it's dangerous to not be in these assets. He said, like, I'm taking your word, John. Right, I'm with you.
Max leverage, full 100%. They tell us, the financial advisors, not to be more than 5% allocated into crypto. Here we are, 99.99999% allocated. What money in the bank account? Boy, all our money's in the WebOff wallet earning yield right now.
Facts, bro. Facts.
All right, let's get into this today. This is going to be, hold on. Before we start, Trey White said, I'm listening to this at work right now. My coworker just said that crypto will never be big. Well, you better tell your coworker to listen to this podcast today, because we got some juice for you all today.
Oh, yeah. That's crazy.
That is crazy. The mindset, but not saying that you work at Walmart, but just this mindset that there's always got to be somebody to run the cash register, right? You, Trey, might be the person that goes to Walmart to spend your hard-earned money, giving it to the person that works the cash register. Well, your coworker could be the person that's stuck in the matrix and never escapes because they don't have the mindset to. It's part of the system. It's unfortunate, but you can't save everybody. I've learned that in my career. Kind of sucks, but it's true.
Facts, bro. Facts.
Sucks even more when it's a family member that you're trying to convince and they're just like, nuh-uh.
Get a real job.
Nuh-uh, crypto's a scam. Come on now. Crypto's a scam after 17 years. What kind of game are you playing?
Man.
They're the same people that'll be like, crypto's a scam, but then think money's real.
Yeah. If you ask them, hey, do you want $100 or one Bitcoin? Give me that $100. Zero clue that a Bitcoin is $100,000 plus.
Yeah, that's interesting, man. All right, so let's get started in today's podcast. What's going on, everybody? Welcome back to another Wealth 28 Club Friday. I'm your host, Cyprex, here with my co-host, Mr. Aquaman. And as always, just trying to bring you guys some of the realest information and research in the game, always keeping it 100 with you guys. Sometimes we do bring personal opinions, but the vast majority of the information that we provide in these podcasts is research-based via the largest organizations and institutions in the space. So we're going to continue to do that for you guys today. We're going to kick it off here on this saying that Aqua's just been reiterating to everybody, which I can't stress enough, needs to be, in my personal opinion, again, this is my personal opinion, backed with research via people with credentials, that everybody really needs to focus on building a passive income plan in crypto, a retirement plan in crypto, not via selling your digital assets, but learning how to put them to work for you and pay yourself with your crypto portfolio. So I'm not going to play this clip that Aqua had posted on his Twitter profile because it has some music in the background and I don't want us to get flagged on YouTube for copyright. But if you guys don't follow Mr. Aqua, make sure that you guys go over to his X profile and give him a follow. He's always dropping gems. So just in general, the quote that Aqua had provided here in this video, the key takeaway is that everyone is looking for an exit plan to get out of the crypto markets, right? Meanwhile, we have this massive transformative shift underway where everything is coming on chain. Doesn't that make a little bit of, it's like scratch your head on that one? So Aqua revisits this ideology that instead of creating an exit plan, everybody should be creating a retirement plan via putting their crypto assets to work. Aqua, I don't know if you want to speak on that real quick, bro.
Yeah, I mean, it's like this. It's like if you exit the market 2026, and let's just say hypothetically your portfolio is worth, I don't know, $2 million. I mean, technically you can get around 15-20% on that 2 million. And it just like, and that cash flow is probably more than your salary, right? So if you think in those terms, well, that's 2026. Imagine what 2027 is going to bring. So your portfolio in 26 was worth 2 million, right? But in 27, now your portfolio is worth 8 million, right? And you're still getting that 15-20% on that portfolio. And every single year, now your income is going up. And when you set up your crypto finances like this, you're going to stay in crypto for the long haul, and you're going to stay in crypto for life and be able to hand these digital assets off to your children, and they're going to do the same thing for your children. But it's just wrapping your mind around, okay, well, when my portfolio does go to this certain price, and there are protocols that are compliant, and regulations are in, and maybe there's some sort of like insurance that you get by deploying a certain amount of liquidity onto certain protocols or what have you, and that brings that level of comfort and safety. But yeah, once that's here, it's like you guys really got to wrap your minds around, all right, how do I get my digital asset to generate me cash flow instead of cashing out $2 million? And then it's like, what, I mean, if you have a good plan with that 2 million outside of crypto, like some sort of business, then more power to you. But if you're just taking that 2 million out to go and buy this, go and buy that, and pay for some lifestyle change for, a few months, you're going to run out of that money. Right. But if you, again, plan it to work for you, then you have a whole different, journey and a whole different future. Right. So
yeah, I think too that, I mean, there's so much to say on top of what you just said. First off, like too many people think too highly of themselves to gauge the market correctly. Like too many people that are investors and should just be and remain investors think that they're traders, when in reality, they have no idea how to gauge market fundamentals or market cycles or institutional order flow or any of those things, because all they have to read markets is some apps on their phone. Like if you think that you're going to be able to read the markets correctly, to time the top, to time the bottom, to re-enter back in, to reallocate after you've sold for fiat, because you think you're going to be able to build your bag bigger, the statistics of that actually working for you are not in favor of your portfolio growth in long term. I'm just saying, and I'm going to show you guys some perspectives from some industry leading experts, but that's just the fact. 98% of retail investors don't actually make money in this space. So this ideology and this notion that all these influencers provide for you guys on the internet, that you're going to be able to successfully sell the market top and then call the market bottom and re-implement all that capital to build a bigger bag, statistically speaking, is not, it's probably not going to work for you, So when you think of that, and then you favor what Aqua just said, hey, look, I'm in this crypto thing for life. Maybe a portion of your portfolio you do sell for stable coins to pay yourself your initial investment. But with those stable coins, you lend them out to earn yield, borrow against them if you want to buy yourself something nice. That's still in line with what Aqua is saying, is think in terms of passive income and not just selling for fiat and then putting all that money into your bank account and living lavishly off that money. You should be living lavishly off the passive income that you're making. I mean, honest to God, that's a mindset that still resides even in traditional finances, like have enough real estate or have enough stocks that pay dividends to just live lavishly off the passive income. Which is why I don't understand why so many people in crypto have and are such against passive income. It's weird, but again, it's a mindset shift that is required, and it will happen over time. So don't take that from myself and Aqua. We're going to just listen to one of our favorite high-end individuals in this space. She has credentials that are active at the CFTC, at the World Economic Forum, at the DTCC, and at Franklin Templeton. And she here goes on to talk about in this Milk Road interview, so shout out to the Milk Road for this podcast, just how everyday average individuals should start to learn about DeFi. Why? Because the banks are. And again, follow the money, right? Follow the smart money. So listen here to what she says to just back what Aqua pretty much just said to you guys.
And in order to understand even basic things like staking or various yield generating products is a step that a lot of people don't take. And I don't expect you to speculate on what we need to do to educate the world on financial education. Like, that's an important thing that everybody needs to do. I just hope that they take advantage of that, because I just don't know that they will, especially when so many people have cash sitting in, their savings account, and they could click one button right now and put it into a treasury. And a lot of people don't even do that. And that's not even using blockchain or crypto, right?
But this is where I do think that AI is going to be super helpful, because just like what we were talking about with MetaMask allowing you to now use your Google or Apple wallet sign in and not have to remember your seed phrase, right? I am not going to have to make these personal decisions, right? Today, if I want to take advantage of all of these different yield-bearing opportunities around my investment portfolio, I have to actively manage the use of my tokens in that manner. In the future, when I buy an investment portfolio, my onboarding document may have a little clause in it that says, would you like us to optimize the use of your assets? And if I just click yes, this may all happen automatically without me having to take an action, right? That is the beauty of smart contracts and the ability to automatically execute based on pre-programmed contract terms. A lot of this may just happen automatically on my behalf. And the same is true for cash, right? We talked about cash and what's going to happen with my cash and my savings, right? Today, every institution in the world, every hedge fund in the world, every corporate treasurer in the world, every single day, they sweep all of their undeployed cash into yield-bearing money market funds. And that money sits in those money market funds until the next time they need that cash, at which point they can sweep it out of the money market fund, put it back into cash, and spend it, right? This is too going to become an automated function that every person is going to have in their portfolio. Why would I sit with a stable coin in my account where I'm not earning yield on that stable coin? I would sweep that stable coin into a tokenized money market fund. And if I need that cash back, I can sweep it out of that tokenized money market fund and have that cash available within seconds. We already offer this.
Wow.
Yeah, I saw your eyebrows go up.
I did not know that. And as she's saying that, bro, I'm thinking, all right, well, on the Metal blockchain, for these institutions to have their own blockchain, they have to have a subnet, right? And a subnet is 5 nodes. And what do we know about running a node and becoming a validator? You earn yield, 12%. So who's to say that these institutions and FIs are not going to do the same exact thing that she just explained right now to the T, but in Metal, and locking it up in cycles on their nodes, aka their subnet, right?
Bro, I have a video. I mean, if you want to go there, like, we could go there, but I got a video of Sandy Call saying that institutions in the future are all going to need to run nodes if they want to be regulatory compliant.
Oh my God, yo.
Yeah, I'll play it real quick. I'll find it real fast while we play this other clip. But yeah, man, it's crazy, dude. And what you said, that's what you're thinking of, right? When you hear this, you want to know what I think of when I hear her talk? Wealth 28 Club, bro.
Yeah, no, for sure.
Like, we've been doing this for over almost 2 years now. Like, we're going on 2 years of just running these. Yo, you know what's so crazy is everybody's always in moments of these pullbacks, that like the one that we're seeing now, since we're on the topic of like, coming to a reality that most people aren't going to be able to gauge the market top correctly. I want everybody listening to this right now to ask yourself the question: did you trade your portfolio as of recent? The market cap in crypto has pulled back from the September and August highs over $330 billion. And are you still holding on to your positions? Most likely, because there might be a few scatters here that people are like, yeah, I sold some profits, but most people listening to this call right now are still holding on to their long-term positions. That's just most likely the fact. And so were you able to most recently gauge the market top correctly? Because there is a local top in the market that came in at $4.189 trillion. And who knows to say that the market couldn't correct lower from where we're currently sitting at. And so again, just to prove what this gentleman here is about to say to you guys, most people don't know how to gauge market tops and bottoms correctly. And so if you try to do that in the future, if you're not a trader who can sit at their computer and actually watch New York, London, and Asia fundamentals because you're at a 9-to-5 job, you're probably not going to successfully be able to do that. And so you're better off just holding, having a long-term perspective, selling out of your initial investment to pay yourself and make your investment risk-free, which is a smart idea, but just having a DeFi plan, a yield generation plan, compounding, buckling down, picking some blue chip digital assets and earning. And understanding that cash is devaluating at a rapid pace year after year. It's like 3% or something year after year, which is insane when you can go make 4% holding freaking XPR right now and benefit from price appreciation. And on metal too. You don't have to run a note if you want to earn yield on metal, since we're on the topic. You know?
Yeah, and you get your rewards in real time too. So
every single day, bro. I
Every
claim
single
them
day.
joints 10:30 p.m. at night. I'm claiming, compounding, and smiling.
facts, bro. Facts.
You know, so listen to this gentleman here. This is the co-founder of Tether. Now, I know a lot of people have this distaste in their mouth for Tether. I personally don't. I've been an advocate of always trying to show people that Tether is most likely not going to collapse, might not be the leading stablecoin provider in the future, but I don't think it's going to collapse like most people have thought for the past consecutive couple of years. Regardless, this gentleman definitely has some insights via just who he is in this industry. And listen to him tell you guys the same perspective that we've been relaying here in the CyberX 1228 Club, that if you're not a day trader in these markets, you're better off, instead of creating an exit plan, creating a DeFi plan long-term, right? A passive income plan with your portfolio. Take a second here and listen to this gentleman speak.
With 2% or whatever, if I had that minimal exposure, I would not pay that much attention. If I had to ride through a downturn for a couple of years, I'd say whatever. And the reason is this: the greatest risk when you are involved in a investment that has a very long trajectory, but that's got volatility along the way, the greatest risk you have is that you exit and you never get back in. And that risk is so great, in my experience. I've never exited. You know, I just have held my crypto. Could I have done amazing if I had sold at the lows and, you know, or sold at the highs, bought back at the lows? Of course, but I never knew what the lows were and I never knew what the highs were. So when people talk to me, as they do all the time, and they say, it gets kind of annoying sometimes too. Oh, Bitcoin dropped 10, 15%. Should I sell? It's like, well, yes, if you literally are going to miss your rent because you needed that money, but you shouldn't have had that in there if you were in that situation. But no, you should not if it's just money that's being put in the speculative bucket.
Bro,
yeah,
I'll just say this. This is the co-founder of Tether. And what does wax mean? I don't know what that means, but he's the co-founder of Tether. That alone, him having this humility to admit, I'm not going to be able to time the top or the bottom. I feel like so many other retail traders need to listen to this and adopt this humility, because at the end of the day, if this is the co-founder of Tether saying this, and you work somewhere that is not related, if your resume does not compete with Mr. William Q, you should consider what he's saying right now.
Yeah, but people won't, bro, because their ego, their ego, and the influencers that are out there with the 100,000 follower count, and they're like, yo, you guys, when XRP is $50, it's gonna pull back to $5, and this is what the influencers tell you, y'all. When XRP hits $20, I'm going to tell you guys when it's the time to sell, and then follow my lead, and I'm going to enter back in at $5, y'all. Come on now, we got this. And they motivate you thinking that that's a reality. Yeah. But that influencer doesn't know that that's going to happen. That influencer doesn't know what price is going to do at $20 or at $30 or at $50. And what if it does hit those levels? You sell because you follow some influencer thinking and telling you guys that that's a smart idea. The market never pulls back. and you're
And that's
priced out.
it, and it explodes even further to the high side.
Now, again, because I'm a day trader, I actually have a completely, entirely separate portfolio for just day trading. I'm not against taking profit or selling or anything, but I'm just talking about the average person on Twitter and on YouTube with a couple thousand to a couple, maybe $100,000 in their portfolio. You're probably not going to guess the market correctly, right? So
Facts, bro.
why base your entire future and your family bloodline's future on a guess instead of guarantees?
Yeah. Yeah. Yeah.
You know,
And what I could see now too why you're playing this clip, because this goes hand in hand with what John Ungerland is saying is being dangerous to not be in the markets right now.
and I think too that the more like more people need to question these influencers. Like who the heck are they to tell people that XRP is going to go to this price or that they're going to be able to do this or do that in the markets? It's like not enough people are questioning the intelligence of the influencers that they're listening to, and instead just taking what they say and running with it as if it's reality. And it's like, nah, like tell these influencers to show y'all some credentials, you know, show them that they've been able to run, you know, a 7-figure portfolio trading successfully in the markets. In CyberX, we got that proof. You got 3 mentors in CyberX that are millionaires and 1 mentor that's a multi-6-figure investor.
Facts, bro. Facts. That's that real talk. That's what really needs to, like, people need to start pulling cards. Like, show me your portfolio, and show me your portfolio your first year, and show me your portfolio what it looks like today. Right?
You know, and it just not enough people are. And I'm telling you, man, there's going to be an onset of people that continue to say, I used to say that there's a group of people that invested in crypto and a group of people that aren't. That's what the future is going to be like. But now I'm more like even smaller. There's going to be a group of people that invest in crypto. And then there's going to be a group of people that invested in crypto between now and 2030 that earned yield on their crypto and compounded their portfolio. And those are going to be the new 1%. Everybody else that just invested in crypto is going to be like 2, 3, 4, top 5%. But the people that compound between now and then, stack and scoop up more shares of block space in this game, y'all are going to be the winners, the true winners.
Facts. And super patient too for the ones that create that cash flow, because once your cash flow gets to a certain comfortable amount coming in, you're like, all right, I'm chilling. I'm making great streams of income coming in. So this can take another 2 years before it levels up again. I don't mind, because I'm Gucci right now where I'm at with this cash flow that's generated coming in right now.
Same people you guys will ever want to do an influencer check this out. Check this mindset out. The same influencers that are telling you guys that currencies are collapsing and that the dollars are going to be replaced, like the dollar is the global reserve currency now and it's going to be replaced in the future, blah, 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 are the same people telling you guys that they're going to sell their crypto for fiat at some high price. How much sense does that make?
Zero.
They're the same ones telling you guys that BRICS is going to replace the US dollar and the dollar's going to zero, but then they're telling you guys that in the future they're going to be able to sell their crypto for fiat to survive. What? Moment inside.
Yeah, that don't make no sense, bro. That don't make no sense.
It must just be my logical thinking. I don't know,
That logic, bro, that logic kicked in, that firm, you have a better understanding. So it gives you that logical mindset to understand it the way you just spit it, bro. So
yeah, spitting facts over here. Every day, your crypto could already be working for you. I said in this post, Metal XPR loan as an example, earning yield, growing, compounding. While most people wake up and start the grind for a paycheck, DeFi lets you wake up wealthier than you were yesterday without having to sell a single coin, even if you're just earning 10 cents a day, right? Your net worth is growing, scaling.
Yeah.
This isn't a dream. It's happening right now on chain in the Metallicus ecosystem. And the Metal ecosystem pays you every day for providing liquidity, staking, and securing networks that will power the new financial system. Just like Sandy Call just said to you guys that these banks, they're going to be the ones doing this stuff. When the average person finally realizes that they can earn yield 24/7 in real time with no middleman skimming the profits, it's game over for the old way of money. I encourage you guys, and I know so does Aqua, to learn the tools, position yourself early with knowledge, and let your assets do the hard work for you,
Facts.
So let's take a second and listen to this gentleman here. He goes on to talk about how he believes in the future. You know, you should be putting your assets to work. This is John Ainsworth and the DeLand CUSO, or Credit Union Service Organization Chief Information Officer, John Ungerlin, discussing lenders in the stablecoin era. So take a second here and just listen to what he says.
Important consideration where, you know, we preach it, but this is an example where I think we're actually delivering it. So
Yeah, I would say kind of a philosophical idea that guides us here is this ancient saying that money is the mother's milk of politics, right? So when we talk about local financial institutions and why we want to see them connected to these new types of money, it's because it's very easy to imagine a world where all of finance gets hyper consolidated through a disruptive event here. And, you know, it's as simple as if local financial institutions aren't preparing a strategy where they're going to plug into stable coins, offer their own stable coins, connect to Bitcoin, connect to Ethereum, then they're, you know, de facto disconnected from the money business, unplugged from the money business. And as you alluded to, JP Morgan and all the Wall Street firms and Bank of America and everybody else will step in. There are already Fed white papers out there that show that those players are testing and proving their own non-NACHA, non-ACH, non-EFT settlement rails. So why we wouldn't be doing the same, I don't know. That's why we didn't sit around. We know that the large players are finding faster, better, cheaper ways to move money. So we went ahead and built the gateway that local FIs need for that. Look, it's simple. I want my kids.
I just want to pause right there. He said we built the gateways that are going to allow this to happen. And then at another point in time in the video breakdown, he mentions that this gateway is Metallicus, just for the record. So just remember that.
To live in a world where if he wants to build a business or buy a house or secure his digital wealth, and he doesn't have to be a lone wolf and a maverick and store it in an external wallet somewhere. He can put it to work in his local community, and he can make it part of the community economy, and he can work with local financial institution representatives that, you know, have a bigger purpose in mind, a higher purpose in mind than just, you know, me hodling my Bitcoins in my hardware wallet. You know, that's easy enough to do. I've done that for a long time. What I want to do is I want to put digital wealth to work in the local economy and community and help it enrich a cooperative network, as opposed to just squat on it myself in a digital asset wallet. There doesn't seem to be a lot virtuous or sustainable or noble or scalable about that. So we think it's really important for the diversity and heterogeneity of the U.S. banking system to persist.
So long story short, right? Dude goes on to talk about how you shouldn't be sitting there with idle crypto. You're going to want to be putting your digital assets to work. And he also specifically mentioned that these banks, these institutions that aren't preparing a futuristic strategy where they're doing this with their crypto, they're lacking. That's a huge statement.
Yeah. Yeah. I forget. I think the timestamp is around the 20-minute mark. I forget the timestamp, but he had said also that if you could beat your competition with cheaper and faster payments, or you can move money cheaper, faster, and don't lose as much money as the average FI, then that's checkmate to your competition.
Yeah, I think we're going to play that one next.
You're going to play that one? Okay.
Yeah, because I have these documents here because, as always, myself and Aqua, we're just trying to always show you guys it's not just coming from like people that are involved or interconnected with the Metallicus ecosystem. Like, this is coming from all angles. So I'm just going to quickly read 2 documents and 2 posts that I put out to you guys just to show you guys context from other organizations saying the same exact thing, that, you know, if you don't adapt, you're going to get left behind. And this is not going to happen in 5 to 10 years. This is about to happen over the next, 12 to 18 months type time frame, where things are really about to start to scale up and revamp. So I said here, institutions are no longer on the sidelines. Reports show we are now only in the first inning, we are only in the first innings of greater institutional adoption, with firm conviction to build this industry into the future. The categories leading this revolution are stablecoins, asset tokenization, DeFi, and smart contract platforms. They've already proven their staying power. So This is an Apollo, obviously, of course, Apollo investment management firm. They have like over 700, I think, $1 billion of assets under management. This is their investment thesis paper from this year. And here it goes on to talk about how many investors think that the Bitcoin trade is over. At Apollo, we believe that we've just crossed the chasm and we are in the early stages of mainstream adoption. That's huge. Why would you want to sell out of a market that is about to, we're only at not even 1 billion users in crypto yet. I mean, come on now. It says it's still early as many still don't understand the concept of mining, proof of work, and infrastructure, which makes Bitcoin the most computationally dense network in the world. As you heard John Ungerlund say, that when he's talking to these institutions and they're like, hey, crypto is a scam, what he refers to is that Bitcoin, the Bitcoin network, and the market cap of Bitcoin itself supersedes that of the credit unions. So wake up. How are you as a credit union going to say that crypto is a scam when the crypto market cap supersedes the market cap of credit unions? Like, come on now, wake up, y'all. Yeah. So this was just a very interesting one to me. And then he says, this document, how we value crypto assets. Again, this is coming directly from one of the biggest asset managers in crypto. Many pundits often describe crypto assets as an impossible to value due to the lack of intrinsic value. It reminds us of valuing the internet in its infancy stages. In early 2000, Forbes articles suggested that the internet may be just a passing fad as millions give up on it. Today, the Mag 7 has a larger market cap than that of the GDP of many developed countries. You're muted, bro.
Yeah, that's a guap, bro. Jesus Christ.
Yeah. I love how they even sourced a little picture of the Daily Mail, bro, from the early 2000s. Imagine if you were alive back then, like investing, and you read this and you were like, yo, I read that newspaper and I faded it.
Yeah, facts. Yeah, it's a super throwback article.
Yeah, this was good. So just to continue to end this, it says, by way of example, smart contract platforms and best valued using metrics such as daily transactions, gas used and burnt, inflation, TVL, whilst DeFi applications where revenue is passed back to token holders are better valued for using more traditional DCF models, combined with crypto native data and deep understandings of technical architecture. The investment team's long-term crypto experience and focus on being at the forefront of understanding market innovations makes Apollo well placed to assess investments in this rapidly evolving asset class. To put it another way, if we had had tried to historically invest in crypto markets based purely off traditional valuation metrics, they would have failed miserably. A deeper understanding of the underlying architecture makes structure and relationships required. So, learn. It's not hard, pay attention to detail, build those networks, build those relationships, join communities that are actually tapped in. This is another document that mentions the terminology adapt or get left behind. This is from the Illumin Digital Unlocking the Path to Secure Successful Digital Banking Transformation Report in partnership with the Financial Brand. And if we come over here, it talks about the cost of waiting is higher than most financial institutions realize. It's no longer a tech decision. It's about keeping pace, right? Then over here, it says old habits die hard. Banks often stick with outdated system because that's what they know. They made decisions based on the best information available at that time, but those systems are now anchors that prevent growth, said Abel, one of the individuals from Lumen Digital. They will no longer be able to compete or maintain the share of wallet in this environment. If you don't make the change to a digital partner that powers speed to market without disruption and has strong partnership models, you risk being left behind.
More you better.
Yeah. And so this just goes hand in hand with the clip that Aqua just had us play. We're going to listen to the full slew of this from about 16 minutes. We'll skip a little bit up just because where we left off, we played this a second ago, where he talks about partnerships that are going to be announced that are going to go parabolic here in the near term, mentioning the likes of Amazon and Apple and Google. But he also talks about, this ideology behind being left out of the new payment system. So just take a second here and listen to what this dude says. John Ungerlund, Chief Information Officer at DeLand.
Yes. I run into too many executives who believe that these are niche, new, unproven technologies. And I like to point out statistics like the market cap of the Bitcoin network alone, that one token, that one global network, the market cap value of that is larger than the entire US credit union industry. when measured in market cap. It's about 8x or close to 10x the liquidity of the credit union industry. So I think that, another misconception is that consumers are afraid of this stuff because it's only used by underbelly types. Then, the numbers around payment channel growths just don't support that. Year over year, we're seeing that digital asset payments is the largest, if not the only growing bucket of electronic payments. And we're about to go parabolic on that with announcements recent and coming from folks like Square, PayPal, possibly Google, Amazon, Apple weighing in here in third and fourth quarter of 2025. So, I think that there's a misconception that the financial institutions get to decide what kind of currency or money merchants and consumers use. I see it the other way around. I see it that, this technology has flipped the table, where the merchants and the consumers are now in control, and they actually don't need an intermediary. I think there's great use cases and values that intermediaries and institutions can bring consumers and merchants, but only if they're, doing the work of understanding what these technologies do and how to incorporate them into their business models. All of these technologies are fundamentally about killing financial institutions. They don't have to kill, but that doesn't have to be the outcome. And actually, I think that consumers are not wired to function as trustless, completely disparate, totally decentralized entities. They want a partner. They want a local organization to work with. They want somebody they can trust. They want good retail service. They want the technology and operational expertise of their institution backing up and protecting their assets. So, I think there's a lot of payment volumes and deposit volume and lending volume and consumer adoption and large organization statistics out there that would open people's eyes to the fact that we're very clearly in the era of stablecoin adoption. And I think we're going to expediently move into the era of other digital asset networks being used for payments and settlements. And look, if a financial institution doesn't have a strategy on this, the reality is their competitor is going to be able to move and settle money at a fraction of the cost compared to them. And that's an end game reality. That's a checkmate. If you're in the money business and your competitor can do it exponentially faster, cheaper, and safer than you, then you can't compete. And that doesn't have to be the case for local institutions.
I think
Bro, the writing is on the wall when he says that, bro. Yeah.
It's undeniable, man. I mean, people at the end of the day, they will believe what they want to believe and they'll fixate on what they want to fixate on. But the truth is that, we're entering into a new era of finance, and the best bet is for you to have a long-term horizon and stop thinking that you're just some advanced day trader that's gonna be able to gauge everything that's gonna happen between now and 2035 correctly. And instead just buckle down and suck it up that you're probably not going to be able to do that. So instead, passive income is the true way, because looking back, compared to people, one that takes the yield approach and just compounds between now and then, and the one who doesn't, most likely the one that compounds and builds yield in their portfolio is going to be much more successful come 2035, instead of thinking that there's some advanced day trader. So check this one out, because I want to finish this spiel and then we'll kind of just leave it open. But there's another video clip here. This is from about 2 minutes and 30 seconds. And this is where I'm going to get into the collaboration with something that one of our other favorite guest speakers, the blockchain leader at EY, Paul Brody, said in a recent podcast that only has 45 views. And so you just heard John go on to talk about how they're integrating stablecoins. Okay. Well, here in this clip at roughly about 2 minutes and 30 seconds, he talks about how they've been preparing to build bridges. They've been preparing to integrate their backend systems into crypto. And this just goes hand in hand with what this gentleman here says, Paul Brody, that banks are adopting crypto and crypto firms are integrating banking licenses. So just take a second and let's play these video clips. And then another thing that Paul Brody here talks about is this ideology behind how a reservoir dam has been completely lifted with the new regulatory clarity and the new approach that we're seeing. And I'm going to play an old clip from one of our old podcasts that myself and Aqua had hosted, showing you guys this liquidity reservoir in which Paul Brody is talking about, because the amount of money is honestly unfathomable right now, considering that we're at $3.7 trillion in market cap. It's hard to believe that we're going to see a $50 trillion plus market. But, you know, when you really do research into the amount of money that's in TradFi that's about to come on chain, those numbers start to seem a lot more realistic than one perceives. So just take a second here and listen to this real fast.
You know, kind of tell me about, you know, how this came to be real.
Yeah, we're excited for a lot of reasons. We've been tracking this space of digital assets now for going on 10 years. You know, I in particular have been a student and passionate about this space for a long time. And as an organization, we've been building intellectual property and preparing for precisely this moment for quite a few years now. And so one thing that I would stress is, you know, what's energizing to us is that we're not a crypto startup firm, and we're not merely slinging, you know, outside wallets. We have worked inside the banking and payments and fintech space for a couple decades, and we have many hundreds of years of experience on our staff working inside the banking and fintech space. And what we've built is a bridge to allow traditional financial institutions to connect to these new worlds of DLT and decentralized money movement and storage. And, you know, with that being a $4 trillion market and growing, we think it's really important for financial institutions to stay plugged into money networks if they want to be in the money business. We see what's happening with stablecoins as very significant. You know, regulatory and legislative clarity came first in the stablecoin sector, and I believe is coming elsewhere with other assets. And we see stablecoins as the doorway through which everyone's going to have to walk into this broader world of digital assets if the dollar-denominated economy is going to stay competitive and cost-effective and safe, you know, in the future of money. So we're really proud of what the St. Cloud team has done, that they're forging a path and being luminaries for others to see that, you know, digital assets aren't inherently scary and risky and dangerous. And also that they're showing the world that you don't have to split your banking business in two in order to service digital assets. You can connect the wealth of your community that they're storing in these new networks and service it as part of that core banking operation, which we think is really important for.
They're using Metallicus, bro.
Absolutely.
That's the second time, by the way. I want you guys to pay attention to that key vocabulary. He talks about the bridge, this gateway, right, that they've created, because it's going to play a key important part when he tells you who it is that they chose to do this with. But so, you know, he just mentioned also too that stable coins are going to be the doorway for this. Keep that also in mind as we continue down the threshold. So now let's head over here to Paul Brody. You just heard the gentleman, John, say, you know, we've been in traditional finance and banking. We're not a crypto native firm for decades. And now we're starting to really pay attention and lock in to integrating crypto into the core services for our clients and our, you know, our business partners. That's huge. That's a huge, you know, publicly addressed statement. And that just goes hand in hand with what Paul Brody here says. So take a second and listen.
So I think a great place to start is, I guess, to ask you from where you're sitting, what's the state of play with blockchain and financial services today? You know, where are we and what are you seeing?
So we're at the beginning of what I expect to be a long game of regulatory and operational and business convergence. We are relatively few years away from a point where it's not really going to be possible to tell the difference between an on-chain financial service and an off-chain financial service. The differentiation between TradFi and DeFi is basically going to disappear. And there's an old saying, and I don't know where it came from, but organizations that oppose each other tend to eventually come to resemble each other. And that's exactly what's happening. So the banks are busy getting into crypto, and the crypto companies are busy getting banking licenses, and everyone's getting ready to launch a stable coin. So eventually these things are going to converge to the point.
Everybody's busy getting banking licenses. Did you hear that? Yes, bro.
He also said, and everybody's getting ready to launch stable coins.
Yes. And
And
who already has their banking license and already has the ability to launch these stable coins.
like, come on, yo, it's so crazy. People are sleeping on this knowledge. Look at this announcement. This is literally just from a couple of weeks ago. Metallicus named finalist for 2025 CU Credit Union Times Luminaries Awards. For what? Metallicus was named a finalist for custom stablecoins for credit unions and institutions, a first of its kind solution. Again, a first of its kind solution. Y'all, come on now. What?
Yeah.
Enabling credit unions to issue branded compliant stablecoins.
Exciting times. And then I'm thinking too about what Marshall just said on X the other day. Metal will bring the first $1 trillion in stablecoin liquidity.
It's almost like you know something.
Man.
Yeah, let's finish listening to this dude here.
Point where it's not going to be really visible who's doing what.
I love that saying, actually. I haven't heard it before, but that's a really interesting way to put it. In terms of, touching on or starting off with at least the big established financial institutions and the big corporates, what is the state of play from what you're seeing? Has there been a lot of progress made in terms of how they're engaging with blockchain and digital assets? Are we still in that early experimentation phase, or are we seeing a much more clearer route to scaled up adoption?
We're in the damn just broke phase. So that's
Scaled up adoption.
We're in the damn just broke phase. So
yeah, bro. Yeah, so hold on. Let's show the viewers what damn he's talking about. Because if we go,
yes, please. Oh my God. My God.
Mind you, this video that we're showing you here is only from 2 days ago, has 42 views. If we go back to a video that we shared over a year ago on this podcast, this has 941 views now. And this is that damn that Paul Brody is talking about. This is back from a year ago. Take a second here and listen.
yes, right. This part of the conversation is called the Great Liquidity Reservoir. And I'm going to struggle to convey just how much capital there is behind this regulatory dam, because the numbers are just monumental, right? How much money is there? Well, let's start with the most liquid of the liquid, right? Bank deposits, stocks, and bonds. $400 trillion, right? Certainly more than my current retirement nest egg, and plenty of money to buy you a nice place in central London or San Francisco. Right, 400 trillion. There's another 379 trillion in real estate, right? Gold is 13 trillion by itself. And then you get to the entire crypto ecosystem is like 2.5 trillion, right? I'm not going to say all of this money is going into crypto, but quite a lot of it will end up in crypto, and a huge amount of it is going to end up in tokenized digital assets.
Bro, that's coming from the freaking blockchain leader EY saying that a huge portion of this money is going to roll into crypto. And then a year later, now he's at this on this panel discussion saying, look, that regulatory dam is unlocked. What?
The dam has just broke open.
now hold on, because bro, I'm not done blowing your mind. This is the last two clips I got to play, because if we continue to listen to what Paul Brody says, he specifically mentioned stable coins. And then remember that the gentleman, because I told you guys to pay attention to the key vocabulary word, the gentleman John said they've built a gateway and a bridge and a solution to onboard stable coins, and that's going to be this doorway. And I just showed you guys how Metallicus was chosen for this solution, where they can provide these credit unions the ability to build compliant stable coins, right? Listen to what Paul Brody here says, how there's no solution yet for this, but then the gentleman John says that Metallicus is that mother trucking solution, y'all. This is crazy. Check this out.
Run that track. Run that.
A scaled up adoption.
We're in the damn just broke phase. So that's really what's happened. So for the last I want to say 5 years or so, prior to about, I want to say April, May of last year, basically the world's major banks were looking on the sidelines, and some of them were looking on the sidelines and saying, I want to be in this business, right? I can sell stuff in here. And some of them were looking from the sidelines and saying, wow, I hope this thing never comes for us. But either way, people were looking on the sidelines, but not doing anything. So there was a little bit of testing and studying and playing, but no substantial action. Once the ETFs got approved, and then particularly, so there was MiCA in the European Union last year that went into effect, and in the US there was a Trump election, and then the long before the Genius Bill got written and signed, everybody knew it was going to happen. And that basically sort of triggered the dam breaking. And so like crypto, like stable coins, or hate them, it doesn't matter. Everybody is now into this market because they understand that it is going to be absolutely transformational. So we are now in the stampede to enter the market, where people are suddenly going from strategy to, okay, I need to do this. I need to participate. And people are getting quite serious about this question of, well, how will I build some kind of differentiated competitive advantage in this market? And I don't think anybody yet has a really good answer.
Too bad we weren't on this fucking podcast.
Yo, because I would have told Paul Brody, hey, you need to go check out Metallicus, because here we are over here. So again, he's talking about how everybody now is about to stampede into coming in, but there aren't really any good solutions yet for them to build out stablecoins. Well, here sits Metallicus. Listen to this gentleman again, John Ungerlin, Chief Information Officer at the Land.
Of dollars, the Bitcoin network has now serviced and operated more hours without error than the Dow Jones has in its entire existence, because it's a 24/7 network. You know, a lot of these things like stable coins and digital assets and Metallicus technology, these things have been around working flawlessly for years. These are definitely established technologies, and the reason that we built and have launched and have live the digital asset bridge and vault is that we know that financial institutions need to be able to treat consumer digital asset wealth across a number of legitimate tokens with large market caps and significant utilities. They need to be able to service that wealth as part of their consumer relationship and consumer profile right inside their existing business. They need to be able to use it as deposits. They need to be able to use it for loan collateral. They need to be able to use it to generate payment income and revenues. They need to be ready to push back on big providers out there that are trying to disintermediate them and unplug them from the interchange income streams with digital assets. And they're not going to be able to do any of that if they're not first and foremost vaulting the digital assets inside their traditional FI. Now, when we built this thing, we built it as experts both on the core technology and payment side of the world. Again, since we're not simply a crypto wallet startup. And we built it with the full knowledge that, there are things that FIs do very well, financial institutions do very well, and there are things that the DLTs do very well. So we blended together the best of what financial institutions do as data processors and customer service organizations and retail outfits, but we didn't lose any of the benefits in terms of security, cost, efficiency, speed of these DLTs and networks. And we didn't, breach any of the integrity of the technology on either side with our coin to core gateway. But, our main concern is to make sure that the FIs hold.
Did you just hear that vocabulary? Our coin to core gateway. And he just said that they did this. He said Metallicus is a proven technology that they're doing this with to build these bridges. And bro, look at this. Metallicus and D-Land partner. Like, anybody can go and read about this. This dude's not capping. So you got Paul Brody talking about this liquidity reservoir that is unlocked, and now all these institutions are about to start to rush in to try to figure out how to build compliant stable coins. And here you have Metallicus sitting at its core, a battle-tested technology that has the ability to do this. Then, like, it's just so crazy, bro. Exactly what you just said, what Marshall Hayner tweeted out. Metal's going to be the first blockchain to onboard $1 trillion in stable coins. That's huge. And then this is the last thing before I introduce Echo. I'm sure all of our guests know who Echo is, but we'll welcome him in. I just saw him tap in. Look at where freaking Marshall Hayner is going to be here in just a couple of days. This is coming up. I know that this is surrounding circulating in the Metallicus ecosystem and TDBM community. But look at this. It says join over 1,000 credit union professionals to network, learn from renowned industry leaders, and engage with cutting edge solutions. Right? You have again Paul Brody saying there isn't a solution, but you got John saying, "Hey, Metallicus is that solution," and here is none other than Marshall Hayner sitting at this freaking event. So if you go to upcoming events, you click on this event here, come over to October, click on the event, and you come right down here and you go to speakers. And here's your boy, Marshall Hayner, is going to be right at this event with thousands of credit unions, giving them the solution to build out their own compliant stablecoin. I dropped my mic. I'm done. Come on now, y'all.
I believe Arena's going to be there as well. Arena Birkin.
Yeah. I stopped scrolling after I saw Marshall's name.
Yeah, right. Yeah, that's actually that key vocabulary that you just tied together and made it come full circle like that, bro. Yeah, bro. That's we solved the case, bro. Case closed. Case closed.
I mean, and at the same time, like it's not, none of this is by coincidence. You got the CFTC coming out literally this week. And what are they talking about? What did the D-Land CEO, or what is the co-founder just say? He literally just said, they're going to need to be able to post these digital assets as collateral. It's right here in the docs. Like if you go and you read this, where is it at? The report here. Hold on, give me a sec. It says right here. This is the report from payments, and it says, their collective warning to the community banks was blunt. If members move liquidity to digital asset platforms that can also lend and settle payments through stablecoins, community institutions risk being disintermediated from their own revenue engines. They're talking about lending, borrowing, given the ability for these institutions to post stablecoins as collateral, right? They're going to need that ability. And what is the CFTC announcing this freaking week? This is from September 23rd, 2025. The public has spoken. Tokenized markets are here, and they are the future. For years, I've said that collateral management is the killer app for stablecoins in markets today. Today, we're finally moving forward on work of the CFTC's Global Market Advisory Committee from last year. I'm excited to announce the launch of this initiative to work closely with stakeholders to enable the use of tokenized collateral, including stablecoins. The CFTC continues to move full speed ahead at the cutting edge of responsible innovation, and I appreciate the support of our industry partners. Acting Chairman Pham from the freaking CFTC. Like this, anybody that's saying like regulations aren't about to catch up, y'all are, come on now. What's up, Echo, man? I see you shaking your head, brother. How are you, man?
Yo, thank you very much for having me on, Aquaman and Cypress. No, I mean, you all said it best. I mean, mic drop. All the information's out there for everyone. And like you mentioned, regulation is what we need in the space, so we can definitely move forward, right? Because with all the BS that we have going on in the space, we have to have regulatory clarity in order to have full mainstream adoption. And that's what Metallicus and all the partnership that they got going on, that's what they thought about from the get-go, right? And this is what I love about it. When I learned about it, granted, I learned about it from DeFi King many years ago, but I'm not gonna lie to you, it was Aquaman that put me on, and I'm always gonna say it. If it wasn't for Aquaman, I wouldn't be here I am where I am right now. Right. And thank God, because, this all collectively comes together to what the US debt clock has to say. I know that's not like a lot of people's cup of tea, but that's what a lot of people know me by, is like covering that US debt clock, because connecting that along with the regulations that's coming in, the timing is unprecedented, literally unprecedented.
Yeah, bro. What's so funny? I feel like you and I both have a similar onboarding experience into the XPR network ecosystem. So correct me if I'm wrong, but I mean, obviously, of course, you and I's influence or follower count know that we've covered and been, covering XRPL and Ripple for, at least myself, I've been covering it since like 2017. So it's been a minute, But when I found out, because when Aqua's the same thing. When I met Aqua back in the day, back 2023, he had told me about Metal and XPR. And I was one of those people that faded it because I had this belief like, XPR is trying to copy XRP, like And so I faded it. I was lucky enough to finally invest at a low price. I should have gotten in a little bit lower when Aqua had told me, but still looking back, I'm like, yo, imagine a deep researcher like myself was fading XPR and the Metallicus ecosystem because I just literally didn't read into it because I had this blindfold over my eyes, like, oh, it's trying to copy XRP because it has a similar ticker symbol. When in reality, I started to dig a little bit deeper and educate myself on ticker symbols and what the X means in XRP, what the X actually means in XPR, and what the PR means, Proton, and what the RP means in XRP, Ripple, and how the X just means it's a cross-border currency, not subjugated by any one jurisdiction, has any one jurisdiction as overhead or in charge. And like when you understand that, you realize that anybody telling you all that XPR and XRP are competitors, you actually start to realize those people sound kind of stupid.
Yeah, 100%, bro. And what is this document you're going to share right now? Because I'm looking at it and I'm like, yo, look at all this purple. Look at all this purple.
Oh, trust me. I like that you saw that because let me blow your mind. So do you know, obviously, of course, since we're on the ideology behind stable coins and whatnot, right? Well, hold on. Before we jump into this, Echo, did you have anything to say on what I just said? Is that true? Like, is that kind of where your mindset came from back in the day?
Yeah, absolutely. That, and because I looked up to because I was new in the space, right? So I looked up to a lot of influencers to to influence me, right? And within the XRP community, there's a lot of negativity that got spread around back in the days, which prevented me from actually looking and diving deep into it, right? And it's going to be funny when everybody starts to figure out that, hey, look, I love XRP. I think XRP is going to be great. Of course, I got a gigantic ass tattoo on my forearm, right? But you got to give credit where credit due. And hopefully, people that see the stream, right, and start doing their research, because in my opinion, a lot of people are going to be, ones that, spoke negative about this whole entire ecosystem and what they've been building in the background are going to be wrong in a very near future, right? And, Roddy Rio says it for XRP, right? The train has left the station. I mean, the train has definitely left the station with XPR and the Metallicus ecosystem. So you got to catch this train while it's going right now.
I think too, just this whole notion that XPR and XRP are competitors. It's so crazy to me that most of the XRP army doesn't understand that actually XPR network has been the leading charge. Like, I'll just give you an example. How long has Flare Networks, and not that I'm against Flare Network by any means, because I hold a lot of Flare. I believe in their long-term vision to unlock DeFi capabilities for XRP holders, but how long have they been screaming that they're the first ones to do this? They're the first ones to do this. They're going to be the first ones to provide lending and all these things for XRP holders. Meanwhile, here sits the Metallicus lending platform with $21 million of XRP sitting here earning 0.48%. Now, albeit it's not a lot, don't get me wrong, but still this platform right here built on the XPR network allows users, the individuals, retail holders, to never have to sell their XRP. If you want, so let's say, for example, I myself invested in XRP back in the early days, sub 27 to 11 cents is where I bought most of my XRP. My bag is substantially in profit. If I wanted to go buy a house right now with my XRP profits, instead of selling my XRP, I could come to this platform, take out a $300,000 to $400,000 loan against some of the XRP that I have, and borrow stable coins against it, send those stable coins to my freaking bank account. And then instead of going to a bank to get a loan for my house, I have a loan with my digital assets, and I'm paying a sliver of a percentage in terms of my loan redebt payment. And boom, I got a freaking house with my crypto.
Yeah, and you have no time frame to really pay back that loan too, back to the loan market. You can do that in 15, 20 years from now if you wanted to.
Mm-hmm. And to take it even a step further, just to make sure that I get my XRP back over the years, what can I do? I can tokenize my property. I can rent it out on Airbnb, and I can use that rental income or that tokenized yield that I'm making off my tokenized property to pay back my loan and get my XRP back.
Facts.
While it's earning yield, while it's locked up on loan.
Can you mind if I share something very quickly?
Of course, bro. Share your screen. I'll add it to the stage.
I appreciate
Let me
it.
do a pause right now while you're sharing your screen real fast. Shout out to the 2,200 listeners that we have on the live call right now. Really appreciate you guys for coming out to the Friday podcast. We're going to keep it rolling for a little bit, but just real fast, if you guys came into the call late, make sure that you go back and you watch the beginning of this. Myself and Aqua were dropping some massive knowledge and gems just on the mindset shift that we truly believe everybody should have. We were listening to some insights from the co-founder of Tether. He was talking about how 98% of retail investors probably aren't going to be able to gauge market cycles correctly. And so that fit perfectly with this notion that Aqua was talking about, is to, instead of having an exit plan mindset, have a passive income plan mindset, where in the future you're generating passive income, you're building a portfolio to pay yourself, and use crypto to retire instead of use crypto to exit, thinking that you're going to retire off of fiat, right? So shout out to everybody that is on this call. Really do appreciate you guys for coming in. We got Aqua and we got Echo here with us today. So yeah, let's continue to grind. Aqua, Echo, go ahead, bro. Let me
Yeah,
share.
so I just put it for the request.
There you go.
Yeah. So I just wanted to just show this very quickly about the U.S. debt clock, because this goes hand in hand with what you're saying about about DeFi, right? Because of what Metallicus has built. If you notice a lot of purple that's around here, right? Sovereign Wealth Reserve, We Are the People, all 50 states, right? So all 50 states are, they're basically handing power back to the states. Anybody that knows the story about the Federal Reserve and how they're just an entity, right? Well, pretty much they're going to have to be bailed out. And if they're going to have to be bailed out, right, it's going to be given right back to the states. So these are why the stars actually highlighted, because this is all coming back. All the purple in here, the background is similar to Marshall Hayner's background right here. This all is a tall tale sign of this was always meant to be. This was always meant to be, right? And I encourage everyone, not just to be financially free, but so if you want to know what is about to happen when it comes to this financial reset, right? Because they have been paving it all along. I've been tapped into the U.S. debt clock ever since the images and the information's been coming out back in 2023. And, it has been telling us exactly what is about to happen, coming up to this point, right? And in 2025, we're supposed to be entering into new USA Treasury dollar, right? And this is where I got locked in, because Aquaman has always told me about the XPR ecosystem and purple. And if you notice, purple is around here a lot. The purple lines, right? The credit unions. That's what got me locked in on all of it. And when you start figuring out the truth about the money, right, then you'll start being like, oh, okay, well, if the money itself is not real, okay, then we need to go into real assets, right? Well, how do I empower myself? Well, that's where here you go. That's where the U.S. debt clock has been telling us. Oh, I gotta have permission. Okay, there we go. So that's where the U.S. debt clock has been telling us right here, right? Because this is the most important piece of information on why we're going into this financial reset. Okay, it's because of the U.S. national debt is unsustainable. Okay, we're 123%. Basically GDP to income ratio, aka anybody that knows mortgage term, debt to income ratio. So it has 123% debt to income ratio. The U.S. national debt is, the interest alone that we pay is over $1 trillion a year. That's more than what we spend inside of our military budget every year. So that should be alarming to everyone, right? And this is why the reset is actually happening, because we're actually going into a new USA Treasury dollar, right? The new USA Treasury dollar is being issued out. It's going to be announced. It should be announced this year, right? Because the clock is still ticking. And they always told us that the DeFi was the future. So, you're listening right now, right? Make sure you tap in with Cypress. Make sure you tap in with Wealth 28 Club, right? So you can learn how to empower your wealth, right? Because this is the information that it's been telling us all along, right? I can't promise you anything, right? But what I can say is that knowledge is power. And if you get ahead of the game and you know how to actually preserve your wealth and tap into it, like, basically like the rich do, you're going to be okay, because it's going to happen. There's no doubt about it. Right? There's a lot of wealth in this world, and we have to start here in America. XRP, great, right? You're going to be handling cross-border payments. Stellar, great. Cardano, great. But there is an ecosystem and a blockchain that is going to tap into the wealth here in America first, right? And this is where I believe it is Metallicus. So I just wanted to just put that out there because I don't want to. Yeah.
Yo, real quick, just the part of the clock, the US dead clock, that really blew my mind because it didn't always say DeFi, that little DeFi window. So once that DeFi window showed up, because remember, like I want to say a year and a half ago, I had told you, and like on this live as well, I was like, yo, I think the way they're going to pay back the United States' debt is through like DeFi. They might like tokenize all the resources here in the United States and then use that liquidity to earn yield. And then that yield will pay back the debt, right?
I was just going to say that. I remember you saying that like last year sometime.
Yeah. So that thing popping up on the US debt clock, that I feel like, yeah, that debt clock got real for me.
That's whenever you told me about that, when it popped up. And I started learning about the metal dollar, right?
Mm-hmm.
And this is where the metal dollar is so important. It's so much different than all of these other stable coins that we have going on here, where it's a basket of stable coin. So it kind of like, to me, it feels like it's a pilot for what could be the USA Treasury dollar.
Yeah, I think too, though, to cap on a couple of things that you were talking about, Echo, is that like because of influencers saying this terminology, flip of the switch, right? The switch has already been flipped. And that's what people don't understand, is that this whole entire notion and transformation that we're headed into is already ongoing. It's been ongoing since a lot of us were in years that were born, like back in the 90s type deal. And it's going to continue to progress. And it's going to seem like a slow, steady progress over time. But then looking back between now and let's just say, 2030, like John was saying, 5 to 10 years, if you're thinking that long that this switch is going to happen, you're thinking way too long and you risk being left behind, because when it really does, and like we just showed you guys, Paul Brody saying that the floodgates are open. Last year, the floodgates that he was talking about are held back via regulatory restraints. And for the first time in crypto history, y'all, we're starting to see a regulatory compliant environment that actually can allow for institutions to come in. And you got these influencers still telling you guys to sell for fiat. Come on now, you guys really got to pay attention to who you're following, because remember I said, if you're new here into this call and you didn't hear me say this before, you got the same people talking and making content about dollar debasement, BRICS is going to replace the dollar as the global reserve currency and all this and that. And they're the same people telling you guys that at some point in time, you're going to be able to sell for fiat currency and become successful. Question everything. You got to start questioning these things. This guy right here, I want to play this clip, and then I want to go back to the document that you pointed out. There's a lot of purple on it from Citigroup. This is David Markley from XE. I played this video clip yesterday on our Zoom call in our private community, but he just pretty much goes on to talk about how currencies have been devalued over the past consecutive couple of years. And historically speaking, the best performing asset against the devaluation of our currencies over the past couple of years has been crypto. Just take a second and listen.
Tell us a little bit about yourself and XE and what you're doing in the yield space and providing.
Yeah, sure. Thanks, Heidi. So I'm David. I'm a founder at XE here. And XE was founded with a broad vision, which was to help all capital allocators optimize their portfolio. We think that beating inflation and monetary debasement is basically top of mind or table stakes for everybody out there. And so if you look at the opportunities to do that, crypto has been one of the best performing asset classes in the last 11 or 12 out of the last 15 years. And so our flagship product, Unity, allows.
So that's all I wanted to play. It's a real video clip, but it requires a mindset shift. That's all it requires. So
yeah.
Go ahead.
And that document too, go back to it, bro. There's Metallicus colors all in it, because there's green, orange, and yellow. Now that I'm thinking about it, with that purple, it's crazy.
Yeah. Before you hop off, Echo, is there anything that you wanted to share before you get off? Because I know you're pinched for time today.
I appreciate you, sending me the invite and allowing me to be on the podcast. Right. Definitely want to, tap into this again one day, because there's so much information that's about to, come out here very soon. And I appreciate, you and Aquaman for everything that you're sharing and what you're doing.
No, for sure, bro. All right, well, let's get into this real fast. Maybe you got time for the speculation because I like that Aqua pointed out the purple here. But if you come over, so we already know, what Metallicus is chosen for via the Luminaries Awards, what they partner with the Land, St. Cloud, all these new partnerships, Valera, even in most recent times. But has anybody really actually? This is the first time today, this morning, where I really actually scrolled down and read the credentials of some of their team members. Have you done that yet, Aqua? Yeah. So,
Yeah. Stacked.
really, dude, stacked, bro. Super stacked.
Yes, bro. Yeah. Go ahead and share because, that's why I said, bro, Marshall has picked like the Michael Jordan in that for every position that he's filled. He's searched for the Michael Jordan of that position.
So I'm only going to fixate our attention and time on 3 because there's many more, but I don't want to get into everybody today, but just these 3 down at the bottom, the advisory board. Sergio Jr., I'm not going to butcher his last name, just specifically highlights, it says most recently was a senior consultant for AI at the Federal Reserve Bank of Boston and was a professional staff member on the House of Financial Services Committee. Take that into consideration when we go look and see who's on the Fed the Faster Payments Council, right? Which is Metallicus. Metallicus sits on that. And what Sandy Qual said at the beginning of this integration with DeFi is that in the future, in the back end, a lot of this stuff is going to be automated by AI, where you're just going to be able to click a button and automate yield generation strategies in your savings account once these financial institutions actually allow you to utilize stablecoins directly in your banking app. So, just here you got Metallicus with somebody who's well positioned with knowledge, most likely, in order to do something like that, right? Then you got this gentleman here, Mark Carawan. This one is very interesting. I'll save this one for last, then we'll get into the city document. But here, Mark F. Joseph. Mark is a bank regulator and a financial services attorney with over 40 years of experience. Most recently, Mark served as a managing council member for BNY Mellon, supporting the wealth management division. Previously, Mark served for 8 years as a general counsel of Capmark Bank, an $8 billion FDIC regulated Utah industrial bank. While at Capmark Bank, Mark advised the board and audit committee on bank regulation and compliance matters. Mark also spent 5 years as the general counsel of Merrill Lynch Credit Corporation, an entity engaged in residential lending and securitization activities. Mark previously served on a board as well with the audit committee of Delaware Trust Company, acting as the sole outside director. And then last but not least, this dude, Mark. This is going to tie us into the city document. I don't believe in coincidences, but again, teach his own. Mark is currently a senior fellow at the New York University School of Law program for corporate compliance and enforcement and the board of the Institute of Internal Auditors. Mark's professional career most recently includes serving as Citigroup's chief compliance officer and a member of the Citigroup Executive Committee. So coming back over here to this recent document, stablecoins in 2030, I've already shown you guys all of the information that these banks are about to freaking launch stablecoins. You got the Land talking about how they partnered with Metallicus to create this bridge, this gateway, and how they believe stablecoins are going to be the doorway for all this. And you're going to need the ability to post digital assets and stablecoins as collateral. You got this city document from September 2025, word for word talking about the same exact thing. Down here at the bottom, since John mentioned that these financial institutions are, on the cusp of getting left behind, look at this. Banks are integrating this stuff. It says, core infrastructure for issuing, storing, and transferring and settling digital money is steadily improving and reaching production-grade maturity. This includes exchange acceptance, custodial integration, clearing, and settlement. This is coming directly from Citigroup, y'all. This is not some retail investor telling you guys, hey, look, it's happening. Then, if we come up to one of the statements that was made in this document, let me just find it real fast. So right here, this is the Chief Strategy Officer and Head of Global Policy Operations at Circle saying, much of today's crypto infrastructure will fade into the background, just as software did with the internet. We are still in the dial-up phase, but as we move towards broadband and the era of blockchain, the focus will shift. In 5 years, we won't be talking about blockchains. We'll be talking about results and activities in this space. And this timeline right here coexists with exactly what John was saying. And I don't believe John is just out there saying, hey, look, if you're thinking 5 to 10 years out, you're thinking this is going to happen too long. These people are sitting in on these boardroom meetings. They're sitting on these executive closed door, meetings with these regulators. They know the timeline, y'all. They might not know specific dates, but they know the timeline. Go ahead, Aqua.
Yeah, no, I was just going to say, I agree with you. They don't know specific dates, but they for sure have an understanding of the timeline. And that's why all their timelines are aligning too with their talk track. So.
And, last but not least, I mean, I'm not going to get into it to save time, but this document mentions the terminology collateral and how that's going to be a core use case for institutions is having the ability to post digital assets and stablecoins as collateral via collateral management. Says it right there, right? And what exactly is Metallicus helping these credit unions do? Well, build their own compliant stablecoin. And what are these credit unions most likely going to do for their customers? Allow them, or at least to some degree, even themselves maybe, post digital assets and stablecoins as collateral. This is huge stuff.
Yeah, huge stuff, bro. Super huge stuff.
So, yeah, I'm out of juice for today, bro. But yeah, this was a fire presentation today. For anybody that joined late, I apologize.
Man, all I got to say is we are in for one roller coaster ride come October 1st till the end of the year. So,
yo, I want to just put that out there because, September 30th, that's when the U.S. Treasury, overhauls their whole entire system. And then obviously, the first, right, with over there, I know some people don't like to hear it, but with the fuzzy community, right, they're all connected. It's all connected. 589. That's why silver is moving so fast. Silver is moving so extremely fast. It's because they're about to unlock that derivative market, and that's where I feel like metal and XPR work hand in hand together because they complement each other for real.
Yeah, but I'll play the devil's advocate to y'all's immediate mindset. I think that by summertime next year, we're for sure going to see fireworks because you see, nothing in the market ever really happens when people expect it. And so even some of these executives and these high-end entities are like, hey, October, November, December timeframe. Usually it's about 6 to 8 months after whatever it is that they project. So I'd say the latest we're going to start to see some crazy fireworks. Maybe it really does start to pick up end of this year, rolling into 2026, especially after this current fade, this current retracement and pullback that we're experiencing in the market subsides, which a lot of people don't understand why we're even seeing, as of recent, $330 billion shed from crypto. It's literally only because of the fundamental shift in risk sentiment. That's it. The underlying fundamentals in crypto have never, ever in history been this bullish, ever. Yeah. Like in the past 16 years. Go ahead, Aqua.
You keep us on point inside our community with the fundamentals and where we're at. Like you've called it all fucking year and last year. You have called it to the fucking T, bro. To the T.
Yeah. I mean, that's exactly why I can say with confidence that most people will not be able to gauge market tops and bottoms because I see from the outside in that we're one of the only communities that accurately does that. All of the communities on the internet and crypto really only just give outrageous price predictions and leave people in their community guessing on future price targets. That's it.
Yeah, that's real. That's a great simplified breakdown of what's going on for sure.
But yeah, man, I mean, we're definitely headed into an era where it's like, it's going to be hard to make predictions, especially even as a trader, because who knows what the liquidity inflows and the volumes look like when, 50% of institutions have 3 to 5% allocated to crypto. We've never experienced that before. So the best thing to do for any one investor or day trader is just to adapt to the changing conditions every day.
Yeah. Yeah. Yeah.
But, to each his own, bro. We must be crazy dreadlock tattoo dudes that don't know what they're talking about.
Hey, in time, baby. In time. In time.
Man. You see me.
Can I join y'all? You grow out my hair.
If you want, I got you. I got
Go for it, bro.
You can come to Texas and get twisted up. You can go to Cali and get twisted up.
That's real,
bro. I miss Texas, bro. That's where I grew up at. Grew up in H-Town. Yeah, bro.
Beautiful. Yeah. Texas. Yeah, man. Yeah.
Well, hey, gentlemen, I'm gonna have to jump off here. It's been a pleasure. Definitely look forward to next time if y'all want to have me on. All right, have a good one. Y'all have a wonderful weekend. Thank you.
See you, bro. Take it easy. It was
a pleasure, brother.
Yeah, man. Yeah, this future that we're headed into, it's going to be very interesting to see who makes it out on top and who is even in the influencer space where in a year from now people are like, I shouldn't have listened to them over the past year. You know,
Mhm.
how many
Like,
of those
yeah.
are we gonna start seeing?
A lot. Come 2026.
Come January 2026, boy. You know
Yeah.
I'm waiting. You know I'm
Yeah.
waiting.
We're about to see it. We're about to start seeing people shed for sure. And the ones that are aligned with DeFi, you know what we're doing? We're sitting back patiently printing money. Literally,
And
that's what we're doing. Printing money while we wait patiently.
becoming your own bank. I don't remember who it was in our private community. I think it was always like one of the key, talkers like D'Angelo or Neff or somebody that's usually super active. And they were like, or maybe it was Kev, I don't know. But they said, do people now even have the maturity to become their own bank? That's what you really got to start thinking about. That's the future we're headed into. If you rely, okay, let me put it this way. All of us pretty much rely on an account-based system. We get paid via our, if you work a 9-to-5 job, you get paid via direct deposit into your account. And then from that account, that bank account, you have to go and do something with that money, deploy it into crypto, onboard into Web3, this, and that.
Yeah.
That's about to change, know?
Yeah. I think I had heard that on one of those guys on, I believe it was Bankless. They had somebody on, and one of them had said, like, during one of their guests, he had said that, like, are you mature enough to be your own bank? And I was like, damn, that was so powerful what he had said right there. But yeah, I mean, bro, maturity goes a long way in this space. Immaturity, thinking you're going to get rich overnight, that's how you're going to get flushed out of this market real quick. Having an exit plan at the wrong time, flushed out real quick. So
I love the power that I feel and I'll throw this at the XRP community because, I mean, albeit I don't claim to be a part of the XRP army or XRP community because I don't just really like that niche of people that are involved in that, if I'm being completely honest.
Yeah, likewise, bro.
But I've been covering XRP and Ripple for some time, and I was an early investor, at least what I feel like, compared to price action now into the project. And so, and it's also, of course, one of my top 3 biggest bags. But I feel so powerful with this ideology and this notion that I'm just going to earn yield off my XRP, park it in a trust, and if I need anything from it, lend it out, borrow against it, and just never sell. It's weird that you have to fight with people to be like, dude, when XRP is $1,000, whenever that future is, why on earth would you want to sell a utility asset that has use cases for fiat that does nothing?
Yeah.
Gives you buying power. I mean, that's what fiat does. But again, that buying power over the years, as you're waiting for XRP to get to $1,000, is going to devalue and depreciate year after year after year after year.
Yeah.
So if you want to give yourself buying power, just lend out your assets, borrow against them. Boom, you got the buying power, and you still got your assets.
Yeah, facts, bro. People are like, the people who doubt what you're saying, what we're saying, what we've been saying for over a year now on this podcast. I strongly feel like our podcast is going to age so well, and people are going to come back and they're going to rewatch, re-listen, and they'll be like, man, they actually really cared about their followers, and they were putting out some real genuine information. Because the ones that are tapped in, you just read the comments, our entire conversation, and they're like, super alpha information. These guys are tapped in. Oh my God, adding value inside the comments as well. You know what I mean? And
intellectual. These are intellectually inclined people that are our followers, not to be rude or anything, but I'm just being honest. Like, not these groups of crypto investors that are like, I freaking love the $1,000 price predictions. Those are my favorite. Like, that shit's cool, but that shit's like so 2021 last bull market cycle type stuff. You got to evolve, y'all. Like, come on, that's the purpose behind being the human being, is just having the ability to expand your awareness and grow as an individual and grow with changing tides. And the changing tide is DeFi, y'all. It's DeFi. Not to shill it to you. I'm not like, it doesn't benefit me if you guys participate in DeFi or not. Could care less, but you should want to benefit your family and your bloodline and understand, like, hey, this transformation is happening with or without me, and I owe it to my family and my kids, especially if you have kids, to not F this up.
Yeah, 100%, bro. 100%. Like, don't be 1000%, bro. You don't want to be the guy that says, oh yeah, look it, I had Bitcoin back in 2011. Look, and then I sold it in 2014. Like, you don't want to be that guy with these new digital assets, because we've seen what Bitcoin's done.
Yeah.
So,
Since you say this, since you said the dude Bitcoin, you guys, if you're in crypto, you've been in crypto for a while. If you're not like fresh, you probably know about the guy that bought Bitcoin, like 10,000 Bitcoins or whatever for a pizza back in the day. I don't know what the numbers are, right? Well, do you think that guy, let's put it this way. So you have all these people that are like, why would you not sell XRP when it reaches $500 or $1,000? Okay, well, that guy, if he had held on to his Bitcoin when it reached $30,000, would he have benefited more from selling it at $30,000 or benefited more from lending it out at $30,000, borrowing it against it, and holding that Bitcoin as it appreciates in value, now worth $100,000, and still having income from the borrowed money?
exactly.
When it hit 30,000, think of that. So same thing. Think of all the people that they're going to sell their freaking XRP that they've worked so hard for. They probably sweat, cried, begged their wife or their husband, hey, can I dollar cost average into crypto, work their 9-to-5 job, busted their balls to get block space on the blockchain via acquiring these digital assets. You're going to sell it for fiat because it hits some fiat target.
Yeah.
And then the market's going to do what? If it keeps rallying, you're so screwed because you ain't getting another opportunity like this one.
No. And you got to like what you said right now, like really think about that. You're going to trade in your XRP at whatever date that is, at whatever prices. You're like, you know what? Give me this much money and you can have my XRP. When you can say, look, I can take my XRP over here, borrow against it like you just said, or maybe plug it into a liquidity pool, and now it's paying me 24/7, endless. And guess what? I get to hold it next year as well. And they say that XRP is going to go to X amount next year. So guess what? I'll be around, and the following year, and the following year, and the following year. Like, these are digital assets that you do not want to get rid of. And if they're in your possession, you should be trying to figure out how to keep it in your possession and make you money. Period.
You know what was the aha moment for me? And I'll say this too. I agree with you 110%. There's two things. First off, if you are the type of person now that believes in high price and that you're going to sell for fiat or whatever, that's fine. That's a mindset that previously existed. I can't say that I wasn't like that before. Just 2 years ago, I was that type of person where I was like, dude, I can't wait. I got so much XRP, y'all. When XRP, I'd be the type of person, even though as a day trader, I'd still be the type of person sitting here calculating whenever I heard a price prediction from some influencer, oh shit, $1,000. Let me do 1,000 times all the XRP I got to see how much. I used to be that person too. Come on, we all go through that phase. But now I'm like, yo, I got power with this. This is powerful,
Mm-hmm.
And so same thing now. It just takes and requires a mindset shift. That's literally it. It's just a mindset shift. Once you have that, you go through this aha moment phase. I don't remember the second thing that I was going to touch on. I'm having a brain fart. What were we talking about?
Just passive income. Not borrowing against our digital assets.
It'll come back to me. Anyways.
Okay.
Yeah, bro. And so I just, I encourage people to just shift that mindset and grow as an individual and grow as a person,
Yeah.
Because that's good.
Don't be out of these digital assets right now, because it's dangerous to not be in the market right now. It's dangerous to not be in the market.
Yeah, I mean, we're going to keep saying that. Like you said, these podcasts are going to age very well. These people on the internet that make these high-end price predictions, it's like they suck people in to get folk fixated, and they have people thinking that they can predict the future. And like I said, I encourage you guys to really challenge the content that you're watching. If you hear an influencer make a price prediction and then 6 months go by, and the 6 months in that 6-month window that they were making predictions doesn't come into fruition, and you're still watching their content, why? You're not progressing at that point. You should be watching and accumulating people's content that allows you to grow and actually make money, not just speculate on making money. I mean, that's why I'm here. I know that's why Aqua's here. We're here to make money, not to just hope that we're going to make money.
Yeah, bro. Yeah. And once you learn DeFi, you can't unlearn it, and it starts to become a no-brainer, and you're going to have a whole different mindset in this space. Like, I'm telling you, like that mindset of just hodl, stack, listen to Moonboy shit that makes you motivated to hodl and buy more. That is the old way. That is old news. Get your DeFi strategy done now, right? And the beautiful part about DeFi is that it's creative finance. You can do DeFi however you want. You can
Low risk, medium risk, high risk.
Exactly. There's so many different routes you can go. I mean, so start educating yourselves now, because like everything in this podcast that we just shared today, like we're not 5-10 years out anymore. We're coming up on the dam is broken. That's what Paul Brody said. The dam is broken. And we're hearing parabolic news coming from Metallicus in the fourth quarter of 2025. God knows what 2026 is coming. So like, buckle up and yeah.
Yeah, dude. I think it's so crazy that they said the whole thing with, the Apple and Google and Amazon thing. That's pretty wild. I'm very interested to see what materializes on that aspect. But yeah, I mean, having the ability to put your money to work, most people still think too, and not just to keep saying most people, because you could be one of these people, unfortunately. Again, mindset shift. Just do research. Tap into people and communities that are just doing research. It's that simple. Most people still think that there aren't DeFi options that provide insurance. There are institutional backed platforms and protocols right now that have institutional insurance options aligned with them right now in the moment. So anybody that's telling you like DeFi is still uninsured, they're just not on the right side of, number one, history, and on the right side of the information and education that you can consume.
Yeah, that's real.
And so it's just the whole notion behind crypto is a scam and it's a fad and it's going away. And, just, I can't stress enough, bro, when you quoted everyone's looking for an exit plan, and instead they should be looking at building a DeFi retirement plan. Bookmark that tweet, bro, because that's going to go so far in the future.
Yeah, I think so too, for sure. Yeah. Thank you, bro.
I'll say this last thing and then I'll play this clip and we'll end it. But, this is that gentleman from the co-founder of Tether. And since we have more listeners, I want to reiterate this. We talked about this at the beginning of our call. This notion that everybody thinks because of the content that they watch that they're going to be successful trading and what's about to happen. What's about to happen, the liquidity reservoirs, trillions of dollars that have been locked behind regulatory gates are finally about to unlock in the next consecutive couple of months / years. And nobody knows what that future looks like. So trying to trade, if you're not a trader that understands fundamental shifts and dynamics and market structures and what actually creates drawbacks, pullbacks, bottoms in markets, you're probably going to F up the ball. You're probably going to lose the opportunity because you're going to misgauge something. You're going to be emotionally attached by your investment. You're not going to be able to gauge properly when the top is or when the bottom is. Just think, I put this into perspective for our beginning listeners. I said, as of September and August tops or highs, which was at $4.189 trillion, the market has shed over $330 billion. Did you ask yourself this question? Did you sell the exact local top as of time of this recording? Most likely not, right? Most likely when the market peaked at $4.189 trillion, you did not sell all of your profit. Now, I can't speak for everybody. There probably were some people that actually pay attention to fundamentals and traders that maybe might have taken some profits and so on and so forth. And maybe at a couple of assets that you invested in back in the early days, you were able to shave some off the top. But a very large portion of your portfolio most likely is still being held onto right now. And you weren't expecting this recent pullback. And that is a fact. And so think about that with the future to come. You have all these price predictions and all these analytical platforms and influencers that are telling you guys when to buy, when to sell, and when they think price is going to reach certain targets and all this stuff. It's all bullshit. Ignore it and block it because it's going to get people wrecked. Instead, have the long-term mindset, understand that we are about to enter into a new era of finance. And what that means for you as an individual is that you now have the power of the bank in the palm of your hands. When you understand that, you stop caring about price action because it doesn't matter if XRP or HBAR or whatever asset you hold in your portfolio is $10, $1, 50 cents, $1,000. You can do the same thing with it now. Perfect example of what I just said is that remember the guy that bought the Bitcoin for 10,000, whatever, bought pizza, and now it's worth a couple $1 billion or whatever, right? Imagine if that guy still held onto that Bitcoin and sold it for $30,000 when Bitcoin hit $30,000 back in, 2021 or something, right? Would he have benefited more from selling his Bitcoin at $30,000 for fiat, or benefited more if he lent out his Bitcoin when it hit $30,000. If he wanted to buy a house or a Lamborghini or pay off his debt or buy his wife something nice, he borrowed against that Bitcoin, left his Bitcoin in a lending protocol earning yield, and used the borrowed stable coins to go out and use his money, his price appreciation for everyday purchases. Now he would be holding Bitcoin still. And all throughout the past couple of years, his Bitcoin would have been earning yield. It would be worth way more because Bitcoin shot up to $18,000 per token. And once he pays back his loan, he can get back his Bitcoin. That is the biggest aha. I don't need to say anything else. If you're watching this, go clip this live, that 1 minute clip that I just made for you guys, and go post that to every other influencer. Why are they not saying that to you guys?
Yeah, facts. Facts. Yeah.
You know? So we cooked today in the live, bro. Appreciate your time as always. This was a juicy one, man.
Yeah, thank you as well, bro. Were you gonna run this clip back or something right now too?
I'll run this clip. I'd rather listen to this one of John saying, you know, he's put your digital assets to work. Put your digital assets to work. Can't stress enough. And if you don't have the audacity to, and you don't want to take the risk in your profile, because there is high risk behind it. It does require a certain tolerance for risk, but that does not mean you should ignore your education. So even if you don't want to go out and deploy in DeFi right now, we encourage you guys, myself and Aqua, to just go learn. Go to these protocols, read their white papers, look at their audits, look at what you can do, what wallets are integral with said platforms, or join a like-minded community like the one here that we've created for you guys at CyberX and the Wealth 28 Club, to tap in and watch us expose thousands of our hard-earned dollars in these protocols to show you guys the steps, so that way when you're comfortable and when you're ready, you can go out and do it. And that might be in a month from now, that might be in a year from now, but at least you have that knowledge, and that's the most important thing. So before I play this clip and we end it here, if you guys are interested, come over to cyberxtrading.com, tap into the Well 28 Club. There's literally probably now, I've lost count, but over 200 video breakdowns of detailed perspectives on how to start earning yield on your digital assets through our lens, right? Through us literally recording how we are doing it with our portfolios in the moment, and then letting you guys watch that live in real time. So you don't have to go out and risk your crypto, right? Come watch us. I mean, I literally lost $500,000 freaking dollars in June and streamed it for the whole community. Who's doing that? Nobody's doing that.
Yeah, true story.
It was super painful. Let's not talk about that. But yeah, you know, nobody's out there doing that for their community members in real time. So come tap in with us, guys and gals. But yeah, let's leave it off here. This is John, the Chief Information Officer at the land. So let's just listen here to what he has to say.
Being mindful of how do we actually, bring this at scale is a really important consideration where, we preach it, but this is an example where I think we're actually delivering it. So.
Yeah, I would say kind of a philosophical idea that guides us here is this ancient saying that money is the mother's milk of politics, right? So when we talk about local financial institutions and why we want to see them connected to these new types of money, it's because it's very easy to imagine a world where all of finance gets hyper consolidated through a disruptive event here. And, it's as simple as if local financial institutions aren't preparing a strategy where they're going to plug into stable coins, offer their own stable coins, connect to Bitcoin, connect to Ethereum, then they're, de facto disconnected from the money business, unplugged from the money business. And as you alluded to, JP Morgan and all the Wall Street firms and Bank of America and everybody else will step in. There are already Fed white papers out there that show that those players are testing and proving their own non-NACHA, non-ACH, non-EFT settlement rails. So why we wouldn't be doing the same, I don't know. That's why we didn't sit around. We know that the large players are finding faster, better, cheaper ways to move money. So we went ahead and built the gateway that local FIs need for that. Look, it's simple. I want my kid to live in a world where if he wants to build a business or buy a house or secure his digital wealth, and he doesn't have to be a lone wolf and a maverick and store it in an external wallet somewhere. He can put it to work in his local community, and he can make it part of the community economy, and he can work with local financial institution representatives that, have a bigger purpose in mind, a higher purpose in mind than just, me hodling my Bitcoins in my hardware wallet. That's easy enough to do. I've done that for a long time. What I want to do is I want to put digital wealth to work in the local economy and community and help it enrich a cooperative network, as opposed to just squat on it myself in a digital asset wallet.
Couldn't have said it any better. And that's not coming from two dudes with dreadlocks. That's coming from the chief information officer at the land.
Literally.
Yo,
so
go ahead.
Check your DM right now on X real quick. You got to share your screen real quick and see what Metal posted. I sent you the post.
Did they repost our podcast?
I wouldn't be surprised. I didn't see that. But no, they literally just posted this like 3 minutes ago.
Hold on.
I sent it to you.
Every credit union, every bank, every fintech, every institution will have a branded, regulated. Dan, dude, while we're on this call, are you kidding me?
Yeah, I'm serious, bro.
This is literally what we were just telling people. That's wild, man. Every credit union, every bank, every fintech, every institution will have a branded, regulated stablecoin connected through Metal blockchain on their own private subnets, attested with digital identity, interacting in a compliant environment with blue chip crypto assets. Wow, bro.
Drop the mic, baby.
Wow. While we're on this call, if you've been here since the beginning of this call, drop some fire in the chat, y'all.
Man, facts, bro.
Wow. Come on. That is wild.
It is. This is, man. Whoo, let's go.
Literally what we just made this entire call on, and then they drop this as our call is about to end. Are they watching us right now?
I know.
Man,
look at all the fire emojis. That's lit, bro.
Way to go, y'all. Way to go, chat. Hey, look, guys, at the end of the day, blessings to you all. Friday podcast here in the Well 28 Club. We're going to continue to run these for you guys in the coming weeks. We've been doing this for almost 2 years now. These are the podcasts to tap into. No hopium, no hype here. Just showing you guys documented information and panel discussions from some of the largest players in the game. We're going to continue to keep it real with you guys. No hopium, no speculative, unrealistic price bullcrap here. Just showing you guys opinions from the people whose opinions actually matter in this space. And then we build our opinions off of their opinions because they're the people that move these markets, right?
Yeah.
Why on earth would you guys want to watch retail investors that build speculative opinions based off of how they feel when retail investors ain't about to be the ones moving these markets in the coming years?
Facts, bro. Facts.
So,
I mean, and you keep saying too, hang on to these bad boys 2035 and beyond. Like I'm gonna say something crazy right now. This is just my pure opinion, right? But I just want to put it out there for the record. I feel like with what we just read right now, with what Metal Blockchain just posted, and what they're capable of doing, and what they're going to tap into, Metal Blockchain is directly aligned right in front of this broken dam of liquidity that Paul Brody had just announced on the podcast that we were sharing today, right? I want to say, depending on how much you have invested, like there's a strong possibility like billionaires will be in the making, I feel like, if you can hang on to these assets 2035, 2040 and beyond. Just my opinion, but
I agree with you. And when you say that, though, people will think, oh, I'm not like, how could I make money? How can I survive until then? And that's where the mindset shift comes from, because literally, if you want to hold your assets up until then, pay yourself passive income. You need stuff like right now, bro, DeFi is completely covering the vast majority of my in-house expenses, like my freaking water bill, my electric bill, my gas, my grocery bill. Bro, I'm making that much money per month in DeFi. It's crazy. When you understand that, you're like, shit, if I don't have any expenses right now, I'm debt free, and DeFi is paying for my expenses. I don't really need money right now. I'm just cool. I'm chilling. Like
facts, bro. Yeah. And once you get to that comfortable position, I'm telling you, because my DeFi money coming in is super comfy. So like, I'm in no rush, like paying bills, like you just said. It feels great coming in. Again, no rush to have this bad boy go up tomorrow because I have cash flow coming in. So,
And the
most
best
people-
part is what
Yeah, go
were you
ahead.
gonna say?
I was gonna say most people just look at their portfolio wallet and it doesn't do shit for them. Like if you could pay just your phone bill every month with your crypto, who wouldn't?
Bro, not even your phone bill. Take it smaller than that. Imagine you're the type of person that drives to work every morning, right? And every morning before you drive to work, you go and get in Starbucks coffee line, right? And Starbucks coffee nowadays, a small cup, medium cup, large cup, whatever, let's say $6.
Right.
Bro, with freaking XLR staking alone, like not to flex, but I'm making $6 a day. So if I did work a 9-to-5 job and I want to go get in line at Starbucks right now, I already know that I could send my yield that I'm earning from my staked XLR position to my my crypto.com card, and I could buy my latte with my yield.
Yeah.
If that doesn't motivate y'all, fuck retirement right now. Just think about how making your life easier and more affordable could be just by learning how to put your currently owned assets to work. Now, again, I'm not encouraging you guys to go out and do that because it's risky. Don't get me wrong, but at least have the knowledge and the power of information to know how to do that when you are comfortable with the regulatory environment on platforms that have valid sustainability in this space when that time comes. That is powerful.
Yeah. Yeah. Established technology is what John Ungerland said, right?
I don't think Metallicus is capping, bro. First of its kind solution enabling credit unions to issue branded compliant stablecoins. And they're saying every bank's about to use metal.
Bro, and that's a question that I asked everybody on the private Zoom call that I had on for the Thursday Zoom call. I said, please, somebody, if you know, who has the same capability to do what Metal blockchain has built? Like who else can do what Metal blockchain can do?
Crickets.
Fucking crickets. And I'm down, like I'm always down to hear something, have the humility to learn. Like I'm not an egotistical person. Like I'm not going to look at that. Like if there's something, let me take a look at it, please. To be honest with you, that's how my mindset has gotten to where it's at today. I didn't like get into crypto, marry a bias and stay married to that bias. No, like I came in, yeah, I married some shit in the very beginning because like you start hearing all this crazy shit, especially when you're new to crypto. But you got to keep evolving, keep learning, cross your own T's and dot your own I's. Don't just listen to somebody and take their word for it. Like, you know, so.
Before we go, bro, I want to just focus on one of these comments from Joe Buddy. Okay, check this out, Joe. Let me blow your mind real fast. First off, let's read this comment because it's incorrect, unfortunately, which most likely means that, Joe, you haven't watched mine or Aqua's content, and this was probably your first podcast, and you probably joined it late because your comment shows to me the lack of awareness of what we actually preach here. So Joe said, I will not do DeFi until there are protections, which we've already confirmed in our private community and on this podcast exist in the moment. I just won't. I am an older man and cannot in any way lose my crypto, which I 110% agree that you have a good mindset on that. That is a phenomenal mindset to have. You should not want to lose your crypto by any means. Everybody should want to hold on to their crypto for life. We're literally encouraging you guys to learn how to never sell your crypto. So we're advocates of being very headstrong about not losing your crypto. You just don't know if it will collapse, guys. You act like there is no risk. So let me ask you this, Joe. If you hold crypto right now, right, you are inherently taking on collective risk because tomorrow they could issue some type of regulation where the crypto that you're currently invested in, say it's XRP or XLM or HBAR or whatever, could collapse tomorrow.
Yeah.
So you're already inherently taking risk, right? So you're a risk taker, regardless of your age. Your age should not be induced as something that's keeping you on the sideline because we have people in this community. Even recently, we hosted a Wealth 28 Club link up, and one of our oldest members is literally in their like 60s/70s. You know,
damn.
That's and even if we're not looking at that age, we have plenty of people in our community that are in their 50s currently, right now, on our Zoom calls talking about, hey, look, we got all these retirement funds and this and that, and it's just losing value. But here comes DeFi, right? It just takes a mindset shift. So instead, Joe, I encourage you to not look at your age as something that's holding you back, and instead just educate yourself. You're absolutely right. There is risk involved, but with education in DeFi, it teaches you how to mitigate that risk. Holding crypto is inherently risky. But in DeFi, there are, just like in holding crypto, low risk strategies. A low risk strategy holding crypto is you invest in blue chip digital assets, you store them in institutional grade cold storage, or, you know, personal cold storage, you know, in an LLC structure with the trust. There's all these kind of mechanisms that you can do to mitigate your risk by just holding crypto. Well, those same risk mitigations, people don't know, exist in DeFi, y'all. The same things that you're doing to protect your HODL assets right now exist in DeFi. What are those? ... is the question. That is up to you to determine. But know, Joe, that they exist. So don't think that you're not already exposed to risk, my brother, because you are, right?
Yeah.
But you're likely taking a low risk approach. And guess what? In DeFi, you can do that same thing. You can use DeFi, and there's a low risk approach you can take, and then there's a high risk approach you can take. For your case, because you're older, you're more conservative, you definitely want to go along the lines of what me and Aqua do, which is we just provide nodes. We stake, right?
Yeah.
We generate yield for securing the network, right?
Facts,
We actually help crypto grow by securing the network by staking our digital assets. A lot of people don't know that. So that's a low risk approach in DeFi. And if we can, we try to connect cold storage solutions to our staking, right? So to add another layer of security. It's just, again, it just takes awareness, Joe. I encourage you to shift that mindset, my brother. Learn. I didn't mean for this to sound like I was attacking you by any means. I'm just trying to encourage you to shift from your current mindset to I'm risk averse and I'm too old for this, to no, I need to be the type of person, the older gentleman that's like, yo, I could help the older community get involved if I learn and encourage them.
Yeah, facts. Like my dad is 65. He has a WebAuth wallet and he's doing low risk DeFi because I taught him how to stake. He locked up his loan. He's staking that. He has a good amount of metal. We just haven't got a node for him set up just yet because he's been on the road, and that's gonna, you know, that does require some sit down time, get behind your computer and all that jazz. But, you know, if my dad can do it 65 years old as well, like, you know, print that money. Like, why would you not at least stake? I mean, staking is such a just an easy thing to do, and your assets are still just as safe as if it was in a cold storage wallet. Like, you know, especially XPR, it sits right in your WebAuth wallet. So don't underestimate what this ecosystem can do for you, you know, because a lot of people are not even inside this ecosystem. So they have no idea what's on this side and what, you know, what every digital asset in this ecosystem can do. So, you know, I encourage you guys to, you know, if you don't know, educate yourselves. So
I want to play this with this video clip real fast since you mentioned nodes, and then we're done. Right, we'll get off the call. I promise we'll stop dropping heat for you guys. But listen to Sandy call. Right, again, this is a lady coming from the CF. She has active valid credentials. You guys can go look on her LinkedIn profile from the CFTC. She has valid credentials. She's like a board member at the World Economic Forum and the DTCC and Franklin Templeton. So she's not just some random person. And in this video clip, I just need to find the timestamp real fast, which I will in 1 second. She goes on to talk about the importance of these institutions and how we're going to enter into an era where being a node provider is important. And then I want to show you guys, literally in our private CyberX community, we have an individual, Junior, who will sit down with you on a call and walk through, if you're interested, how to successfully set up a metal node to secure the network and start to earn 12% staking yield on your digital assets, which is, again, low risk considering everything that we just showed you guys, how metal is aligned with freaking compliance, how they have compliant built-in AML KYC solutions integrated. They're partnering with banks and financial institutions. They got ex-city representatives and freaking regulators on their freaking advisory board. Like, again, I'm just trying to show you guys physical proof that there's a low risk approach. So let me just find this real fast. I'm going to look through my notes real quick. Aqua, if there's anything you want to say to find this clip of Sandy Call, saying that, you know, node providing is the future.
Yeah, I mean, and just going back to Metal blockchain and reminding everybody that when these institutions, these fintechs, these FIs do start their own stablecoin, do start their own metal or start their own blockchain, right, in their own name, that's going to require them to have a subnet on the Metal blockchain. And to run a subnet, you need to have 5 nodes. And each node is a minimum of 2,000 metal to run that node. Now, we're talking big money with FIs, institutions, fintechs. I don't think they're going to be doing the bare minimum. And then based on what Sandy Cole had said, as far as they take all of that underlying money, scoop it up and put it in yield bearing situations or whatever to drive yield and cash flow. I see them easily doing that with these nodes. And then she says it on stage too. I guess you're saying it as well, right? That's what you just said.
Yeah, I'm going to play this video clip real fast.
All right, yeah, go ahead. But yeah, I think of Metal though. I think of Metal. I don't know any other chain that can do that. So yeah.
That maybe a mistake that you guys have made or you've seen made that you would recommend people don't make as we look to move this forward quickly?
I'll start out. I think that you need to understand, I think one of the most unfortunate branding exercises ever was when we started calling them cryptocurrencies, because it created this expectation that somehow they're a currency and they can be spent on things. And you need to understand that it's a way of buying block space on the ledger. That's really the purpose. And so you need to hold these cryptocurrencies in your treasury if you're going to be recording trades on a ledger. And if you're holding these assets in your treasury, you need to figure out what you need to do to hedge against them. And that's when you need to figure out that you need to do node operations. So I think that there is this whole cascading set of.
So you just had somebody that has all these valid credentials and currently works at a financial institution telling institutions at this event, hey, y'all are going to need to find ways to run node operations, right? So what do you think the institutions are going to be doing, y'all, to hedge against these currencies? They're not going to be buying them to just spend them and sell them for fiat currency. They're going to be storing them on their balance sheet. They're going to be staking them in ETF wrappers that are compliant with regulations. They're going to be providing nodes, all these things to earn yield, to hedge against the price fluctuation, the volatility in crypto. And again, you come over to cyberxtrading.com, you tap in, you have no idea what we're talking about. You join our private community, like, oh my gosh, I want to sit in on a private one-on-one call with somebody who has literally set. If you go back and you look at how many metal validators there are, how many metal people that run a node, I'd say that Junior has probably helped at least the last 50 people set up nodes on the metal blockchain. That's his success rate, right? Like, that's a lot of people to sit down on one-on-one calls with and go and be like, hey, this is how you set up a node. Look at what he shared this morning in our private Discord, right? Just an update. Hey guys, you want to sit on a node? You want to get in, you want to learn how to do it. I can walk you through, show you how to do this. Come in our Discord, you click on his link. It'll take you over to his X profile. Shout out to Junior for this one. And you can just book a call with him and he'll show you how to do it. So that way you're not, maybe you don't want to do it now, but in the future, maybe you do. Well, now you got that education, that information.
Facts. And I would say the sooner the better, because we don't know what regulations are going to say. Like, they could, say by this date, you have to be a financial institution to run a node, and certain people get grandfathered in potentially. That's a hypothetical situation. That's just my opinion that I've heard from other people sharing their opinion. And I'm kind of like, damn, I can see that. So who even knows if that's going to happen? But I feel like with it being a possibility, it would make sense for you to look into this information sooner than later, as opposed to sitting back and waiting. So, yeah.
Question, and I don't know if you know the answer, but can you, as an individual, let's say I have 4 computers, right? Can I run 4 different nodes?
Yeah, you could technically, because if like each computer had enough space and the specs to run the node. But I thought the same thing as well. And I had told Luke in like our Zoom meeting back in the day, or however long ago it was now, when we started the node. And he was like, why would you start more than one? Why just put whatever metal into this node and it's going to be, you know what I mean?
Well, I'm thinking of this like Bitcoin miners, right? Like, they have mining facilities. Like, think of like a node running facility, a subnet running facility. Like, you just have all these computers that are running nodes and subnets and shit. I mean, I don't know. Maybe
yeah, because you can put however much you want into your node. Like, you don't have to just put 2,000. Like, you can put 100,000. Like, I got 66,000 in my node right now, and then I plan running 100,000 in my node going forward.
Yeah.
So, I mean, Metallicus is like the only one I've actually seen with multiple nodes. When you go and look on the dashboard on the Metal blockchain node website, Metallicus has multiple nodes with 800,000 metal in each one of those nodes.
Mhm.
Now, why they're doing it, I don't know, but yeah, I don't know. When I had that conversation with Luke, I was like, yeah, I guess you're right. It makes just sense to put it all in one node, but yeah, to each their own though, I guess.
Last thing I'll say is that you guys just heard Sandy Qual say that most people are manipulated into believing that these digital currencies are, currencies, and instead they should be looked at as you buying shares of a block space in order to secure the network to run node operations to hedge against the price fluctuations. That's what institutions are going to need to do, right?
Mm-hmm.
So when you actually look into it, the metal ecosystem enlightened me to realize, like, instead of just looking at accumulating these assets to reach some price target in the future via what I'm imagining is going to happen, I should be looking at, hey, how many shares of this asset do I need to run a node? And when you go and you look at some of these networks and you're like, oh, I need 1 million of these tokens to run a node, you're like, oh my gosh, I'm going to get priced out of being able to do this if I don't accumulate, because I only accumulated this much, thinking that I should stop buying XRP at $10 because when it reaches 1,000, I'm going to reach my price goals. And I'm just using XRP as a hypothetical. I don't know how many, if you can even run, can you run a node on XRPL?
That's a good question. I think it's like you don't get paid for it from my end. Don't quote me on this. I've asked around, and from what I've heard, that like to run a node on the XRPL, you don't get like incentivized for it or something like that. That's what I've heard. And
let's just say we're using whatever. Sorry that we're ignorant on that topic, but let's just say, like, ask yourself the question: do you have, if the XRPL was incentivized for their node providers to give their node providers incentives, yield, which obviously, of course, the XRPL can't provide because it's not, it's not a proof of stake network. Regardless, what I'm saying is now there's proof of stake capabilities because of the EVM sidechain. But still, regardless, like, do you have enough XRP? I'm just using XRP as an example to be a node provider, or any asset that's in your portfolio. Do you have enough XDC to be a node provider? Do you have enough metal to be a node provider? Start looking into that. That's like kind of where my mindset has shifted from, okay, I should accumulate as much of these assets to when it hits $100, I have this amount of money. Now I'm like, dang, I need 5 million shares of this in order to run a freaking node. That's my target now,
Right.
So
yeah,
wonderful stuff here. But yeah, bro, appreciate you. We freaking went on. This is a 2-hour call, so we'll hop off. But blessings to you, brother, and have a good weekend, man. Everybody listening,
likewise.
Blessings to you guys. Make sure that you guys give Aqua a follow on X and on YouTube. Man, we didn't even talk about Snipverse. We should talk about Snipverse next Friday.
I'm down. I'm super down. That will take probably like the whole podcast too. We should definitely do that. And then yeah, we should probably reach out to them too. Maybe see if we can have them on at some point as well.
Yeah, I found out who the developers are yesterday. Definitely slide in their DMs.
Yeah.
Knock on their door.
Yeah, literally.
But yeah, blessings to you guys. If you guys want to tap in, we shared so much knowledge and information. Remember, all of this stuff is always shared in the private CyberX community. You guys can always tap in with our research team. Head over to cyberxtrading.com. There's so many available options for you guys to jump in, lock in with us as we transition into this digital future, one of the realest communities out there. Blessings to you all. We'll see you all in next Friday's podcast.
Peace.